Hi everyone, my name is Olaf Hannemann. I'm a co-founder of CVVC. On behalf of CVVC and CV Labs, I'd like to welcome you to today's event. A few words on CVVC. At CVVC, we seek to create an ecosystem where blockchain startups flourish. We do this through investments, CVVC, and our operational business, CV Labs. At CVVC, our focus is to invest in startups that build applications based on blockchain technology. To date, we've invested in 27 startups from 16 different countries and 4 different continents. Aside from our own investments, we're building investment products together with Swiss licensed asset managers for investors to co-invest alongside us or into other blockchain ventures. Through our CV Labs ecosystem business, we run co-working spaces in Zug, in Vaduz and in Dubai. We organize events, startup competitions, as well as issue research reports such as the Top 50 report. If you're a startup, investor, corporate, or just want to learn more about us, check us out on cvvc.com or send us an email.
Welcome to Crypto Valley. Welcome to Canton Zug. Thanks to CVVC for the latest Top 50 report and for another great event with global outreach. Let's go directly to my 3 key points today. First, Crypto Nation Switzerland. It's fantastic to see the dynamics of the Crypto Valley with already 11 unicorns and many new unicorn babies growing. It's almost like a fairy tale. Only some years ago, Federal Councillor Schneider-Ramann stated in the Zug Blockchain Summit, "We should become Crypto Nation Switzerland." And here we are it. And we did it the Swiss way. We took the needed time to adjust existing laws and regulation for the DLT, disruptive technology and digital assets to become part of our daily life. And best, the Federal Councillor, having completed his mission, retired from Swiss government and joined the CVVC board. Isn't that even all better than a fairy tale? Second, penetration of the financial industry. As per Top 50 report, the traditionally strong global financial center Switzerland has entered more and more in the crypto market. Many financial players like exchanges, brokers, crypto banks, institutional investors, asset managers have now entered. Thirdly, mass adoption by consumers and private investors. Even though Switzerland is traditionally one of the most innovative countries in the world, Swiss consumers are not always early adopters. Now here's the great news, because easy access is key. A Zug-based startup, a spin-off from Bitcoin Swiss called Verdex, has just launched a large network of exchange points, Bitcoin ATMs and vouchers called Crypto Now, together with the department store Manor. From now on, everybody can buy for as little as just 50 Swiss francs crypto. That's why I think we should from now on have the motto, Crypto Now. I wish all of you an inspiring event and then a never-ending, beautiful crypto summer. Thank you.
Hello everyone and welcome to the summary of the Crypto Valley Top 50 report, published by CVVC in March of 2021. Let's get right to the Crypto Valley Top 50 report. Here's the key data. The Crypto Valley Top 50 companies are valued at $254.9 billion. Total funding of the top 50 companies reached $3.7 billion. Total number of projects and firms in the Crypto Valley is now 960. The total employment of blockchain companies in the Crypto Valley, which includes Switzerland and Liechtenstein, is now 5,184. Crypto markets experienced a dramatic rise in the beginning of 2020. The valuations of the Crypto Valley top 50 companies increased from $37.5 billion to $254.9 billion. The Crypto Valley now counts 11 unicorns, up from 6 in 2020. Switzerland improved its regulatory framework even more with the umbrella DLT Act. When we look at protocols, most of the world's important layer 1 protocols make their home in Switzerland, with more and more looking at setting up here in Crypto Valley. In financial services, the long-awaited influx of money from institutional players finally happened, which meant that the early movers saw a dramatic increase in volume. Now more established banks are also building comprehensive digital asset strategies. The services of infrastructure providers such as storage, security, trading software are all highly sought after, not only in Switzerland, but also globally. In decentralized finance, or short DeFi, Switzerland is now also home to two of the most important DeFi projects, Aave for lending and Curve Finance for enabling liquidity of stablecoins. More projects are building important rails and infrastructure in DeFi. The clear regulation in Crypto Valley has been an advantage since 2013, when the Swiss government clarified how to treat Bitcoin. The key elements of the new law are: in securities law, digital securities will have all of the functionalities of traditional certificated securities. It is important to note that certificated securities had been dematerialized in Switzerland some time ago. In insolvency law, the segregation of crypto assets was clarified. And in financial market regulation, a new DLT trading license will be available, allowing for issuance, trading, and post-settlement of digital securities, all under one license. The year 2021 has started with a bang in crypto. And in the Crypto Valley, the excitement can be felt at every corner as more and more people and projects are moving here and join the thousands already in blockchain and crypto. Check out the report at cvvc.com/top50, and now enjoy the event.
Hi, my name is Ruptus Rotenhäuser and I'm the head of brokerage within Crypto Finance Group in Zurich. Today you will be part of a fantastic roundtable regarding the topic cryptocurrencies, the growth of the space, the growth of the product, and what is it all about? Why is Switzerland the center of the crypto and digital asset space on the planet? Why do more and more institutional investors such as MicroStrategy, PayPal, Visa, BlackRock, BNY Mellon enter the space? Is it depending on clients' demand? Is it depending on adding new revenue opportunities for the banks? What is the secret? Why is it working in Switzerland, where regulatory umbrella and legal shelter is unique? The Swiss market has always been at the forefront when it came to dematerialization of securities, where cryptocurrencies entered the space first. It's not a surprise that Libra 2 years ago, when Mr. Zuckerberg wanted to implement his digital currency, why did he select it to set up the company in Switzerland? There is, of course, an ecosystem around it. The panel today is populated with a fantastic breed of quality and experience in the space. We have participants of fintech banks, product providers, retail coverage, institutional brokerage, classical banks. So you will experience and understand why Switzerland is so much at the forefront of the cryptocurrency environment. In addition, those participants on the podium today will give their views and experience, and why it is still difficult to talk to banks. Why are banks still hesitant when it comes to the crypto market? Is it because they don't understand it? Is it because the technical evolution is too hard to translate in their old core banking systems? Why is it the fact that I would say the increased demand from the clients comes from the private individuals and is brought to the institutional space? I hope you will enjoy today a fantastic discussion. I hope you will go home and all your questions are answered and you learned why the cryptocurrency market is enjoying a beautiful run. And I can assure you at Crypto Finance, we have seen a similar increase of volumes over the past. Since last quarter in 2020, volumes have x-fold in cryptocurrencies. Number of transactions increased, new clients onboarding on a daily basis, and we are simply a blueprint for the industry in the Swiss market. Everybody is enjoying a beautiful increase of business, and we want to give you the reasons why. Thank you so much and enjoy the day.
Okay, welcome everybody to this exciting panel we're going to have today on Crypto Valley and the flood of institutional investments. Well, we'll cover very exciting topics around the who, the what, the when, the why, and the how around this topic of institutional investments. And we'll see if it's really a flood of institutional investments or it's just a trickle, and we'll see the reasons behind. It's an honor with me to be here with you all. I know you have a choice of what to listen to, so thank you for being with us so we can share our passion and on the top and the trends on this topic. My name is Henry Arslanian, and really my passion and focus in life is the future of finance, future of money. I do this wearing many hats. One of them is a PwC partner, a global crypto leader, but also one as an adjunct professor at University of Hong Kong, where I teach crypto, but also one as an author with some of my books on the crypto and finance. And as well, last, I think with how many of you know me, as part of my social media LinkedIn shows on crypto that I share with my 500,000 followers every week. And today, we're really going to try to answer some of these questions we have around this whole topic of the flood of institutional investments. And to do that, we have a dream team panel of actually the people we can have with us today. And I'm excited to introduce them to you one by one, starting, of course, ladies first, with Sina Meyer. Sina is the managing director at 21 Shares. For those who don't know it, it's 21 Shares, a Swiss product issuer with over $1 billion in AUM, which makes investing in crypto assets as easy as buying shares using a conventional bank or broker. One thing, by the way, about Sina that you probably don't know is that she wakes up every morning at 5:55 in the morning to go for a run before the day starts. So here you go. You're looking for a great example in crypto where you have the healthy mind with the healthy, body. That's the way to do it. Sina, thanks for being with us today. Next, we have Ruptus Rothenhauser, who's the CEO of the brokerage of Crypto Finance Group, who's by Crypto Finance, for those who don't know, is a FINMA regulated asset management, brokerage services, and crypto asset storage, infrastructure, and tokenization solutions. Again, a great organization in Switzerland. By the way, one thing about Ruptus people don't know is actually his hobby. When he's not busy with crypto finance, he's into endurance sports like Ironman and triathlons. So here you go. In crypto, we're all about endurance, and Ruptus, you're kind of the living example of it. Thanks for being with us today. Afterwards, next we have Philip Mayer. He's the head of blockchain solutions at Avaloq. For those who don't know, Avaloq is obviously a global leader in digital banking solutions, core banking software, and wealth management technology. 3 topics that we'll talk about today. One thing, by the way, Philip, people don't know, if he had better eyes, he would have loved to be a pilot. But I guess, hey, between flying a plane and getting into blockchain, I don't know which one is more complicated, but you definitely chosen the right path. Philip, great for being with us. Next is Romain Bro. Romain is the Digital Assets Business Development Director at Arab Bank Switzerland. For those who don't know, Arab Bank, since September 2019, Arab Bank Switzerland offers its clients the possibility to gain exposure directly to Bitcoin, Ethereum, and a good Swiss favorite, Tezos. The bank offers institutional-grade digital asset custody and trading solution to both high-net-worth individuals and institutional clients. One thing, by the way, with Romain that people don't know is when he's not busy with Arab Bank, he spends his free time ski touring and sailing. Here we go. Man, we have interesting people in crypto, huh? This is the beauty of it, Romain. Great to have you being with us. And last but not least, Sander Logs is with us. He's the head of institutional clients at SIBA Bank. SIBA, for those of you who don't know it, is the only global smart bank providing a full universal suite of regulated banking services in the emerging digital economy. One thing about Sander, by the way, I'll do a little promo for him. He lived in Denmark, Netherlands, UAE, and 10 years in Singapore, and now he's in Switzerland, and he's a big tennis player. So if you're a tennis player in Zug, Sander is actually looking for a partner there. So here you go, you're there. By the way, a fun fact as well, people don't know, Sander and I went to the same University of Montreal in good old Canada. So here we go, all roads lead to crypto, all together in Crypto Valley. So guys, thank you very much. Let's kick it off. During the panel we'll have today, guys, for all of you listening, you have the chance to ask questions. As you ask questions, I'll be able to feed them to the panel as well. But let's kick it off first with the title of the event, which is Institutional Investors. I'll start with you, Ruptus. Can you maybe tell me, are we really seeing institutional investors come in? Do you have a bit of data, some anecdotes, some market color you're seeing from that perspective?
Sure, thanks, Henry. Yes, we do see tremendous interest from institutional clients entering the space. We have experienced quite a reluctant situation where people never really understood, should I enter the space? Is it risky? What if my coins suddenly disappear? Is the storage adequate? Is the regulation properly organized? So there were some open questions before the institutional space moved in. Crypto, what I believe, is something that has been driven in the past by retail investors, many retail investors, and suddenly more and more it becomes commoditized. It becomes commoditized, the service level becomes better, banks are suddenly starting to entering into it. And guess what? This triggers, again, the demand from wealthy clients going to their bank account, asking, can I execute cryptos with you? No, why can I not? Which is the asset manager who offers it to me? So more and more people suddenly believe this is not only there to stay, it actually is there to make money with it, and people want it. So why do I not make a business model out of it? And why do I not offer services to clients who want to believe that crypto assets belong to a diversified portfolio? So the pressure comes from the retail side, reaching into the institutional space, and what we describe as Crypto Finance Group, we describe as an institutional investor, a financial institution, a family office, an asset manager, a bank, an insurance company, a corporate, everything, but not the mass retail.
So on that point, actually, so maybe I'll pass it to you, Sina, because obviously your motto of 21 shares is you can make it as easy that people can actually get access via their conventional broker or their regular bank. Are you seeing that flow as well that Rupert was mentioning about the institutional flow having easier access to it?
Yeah, sure. By the way, I love your spirit, Henry. Let's go on with the spirit. Yes, indeed, we saw significant inflows also from institutions at 21 shares. And to give you some solid facts and figures, we had in March 2020, so last year, we had 30 million in AUM. Then in December 2020, so a couple of months ago, 200 million. And it surpassed the 1 billion, as you mentioned, just 2 months later, precisely on the 22nd of February 2021. And 75% from our clients are institutional, and we see clearly an uprising trend in the institutional flow indeed.
That's interesting. Obviously that's very interesting data. And maybe I'll move it to you, Romain. I mean, the big debate we've had in the ecosystem for a long time, right, is whether institutional investors coming in, will they go via the traditional players that they're comfortable with, let's say a family office, or they go via the crypto native firms? I mean, good example is in the US, if you look at some of the big, the big companies buying on the treasury or the big banks, all of them have opted to go directly with some of the crypto native firms. What's your view on this? I mean, what are you guys seeing? You think high net worth individuals and institutional investors will go via their traditional contacts at Arab Bank, Switzerland, or they'll go natively?
Yes, absolutely. I believe both are complementary and doesn't serve necessarily the same clientele. For example, financial institutions want to rely on teams who have deep expertise in financial market, as well as blockchain expertise and regulatory environments that can play a marginal role on investment strategies. So on our side, we have an existing clientele which is on demand of qualitative info to make wise decisions. So when they don't have internal resources, we act on their behalf. And in the blockchain space is fast evolving industry, which requires to stay up to date 24 hours a day. Market never stops. There is always some new announcements. And basically, what we do is we buy them time, and they can rely on us to execute their vision and strategy. So for us, our existing clientele is really demanding of what we can offer, and more important, they don't have to change anything to their existing setup. Digital assets are fully integrated into our large offer for as well as part of the financial instrument available. So they can benefit from the both worlds, from the traditional finance as well as the digital asset offering.
So definitely you're proving on the convenience element there as well, right? Which is, I think, quite important. And Sandra, maybe I'll move it to you. Obviously, the way SEBA is positioning is the only global smart bank, and I mean, is it something you guys seeing a lot more interest on? What do you think of that question, actually? Do you see people want to come natively digitally, or you think some people will want to go the traditional route?
Great question, Henry. Thanks again for the intro. That was really appreciated. So looking forward to playing more tennis here in Zug. Yeah, back to your question. Yes, the answer is definitely yes. I mean, we see an inflow. What we basically realize that institutional investors, right, they normally require higher regulatory standards and therefore seek to work with licensed entities that understand the more complex and unique needs. So in our case, for example, at SEBA Bank, we are basically a bridge between traditional and digital assets. And we've been so since we started our business. So SEBA, in a way, we act as a holder and issuer. As a regulated bank, we take care of the client assets, and our custody is really a core pillar for clients. And just on that note, on custody, we really see this often in institutional players, but also, for instance, family offices that are starting to get active in the space. They have high concerns about the safety of digital assets. They've heard of exchanges being hacked, or passwords being lost, or ledgers being damaged, etc. So they seek assurances, and then they're pleased that we have really institutional-grade custody solutions to provide that safety. So answering your questions, I really believe that institutional players will go through fully regulated players when they enter crypto, and I think also the current extraordinary growth that we experience as well that reiterates that. I mean, I'm happy that the camera is pretty far away, because I think all of us in the panel can see that we're tired. It's a really, really intense time, but it's a fantastic period to be in.
Hey, come on, crypto never sleeps, as you know, right? That's the beauty of it. I tell people, if you want to enjoy your weekends, do not get into crypto. But actually that brings to my next question, actually, Philip, because in the traditional banking world, right, again, where markets close Friday night, we can go enjoy the weekend with your kids. Obviously for a lot of traditional banks, getting into crypto has been quite difficult. And of course, Avaloq, you guys service 150 clients, 4.5 trillion, in assets that the Avaloq are trusting Avaloq from that perspective. What are some of the practical challenges you're seeing? So if tomorrow morning, any of the executives listening to this wants to get into crypto, what are the challenges you guys are seeing for traditional banks, let's say, who want to get into it?
Well, first, thanks for the introduction. And looking at pilot or blockchain, I think now blockchain is flying higher than a pilot. So no regrets on not embracing that career.
If you can help with shipping lines as well, we just had a problem in the Canal of Suez. It's a different story.
Different story, yeah. I mean, very often people see issues being technical regarding blockchain, and in reality we see something very different, because even though this technology is quite new, it is quite well mastered, and we don't see a lot of issues on the technical side. It's more on bringing things together, and people sometimes forget that such a project of introducing a new product is not only technical, but is bringing together all the departments in one place. And we've seen sometimes projects delayed because the technical part was ready, but not the rest. So we are trying to help in the technical side to make it happen efficiently. And what I see very often is that banks are not proceeding in the rest because they focus too much on the technical side.
indeed, we have also delays coming from people, reluctant people, not understanding what it is about, and also reading a lot of fake information coming from news, and so there is a bit of education there to be performed. We've seen this very successfully done by one of our customers. They brought their entire compliance team in a 1 week training, and after that the guys were fully convinced, and they were even thinking that they had a greater transparency on Bitcoin than on the traditional platforms.
Absolutely. I think that the education element is key, from many regards. I think that's been the key to success. We often think the problem is technological, but often it's human. There's a human element to it as well, right? Which is obviously we tend to underestimate on it. And actually, I'll bring it to Europe, this, because I think what Philip is mentioning is very interesting about the human element and the technological element. You obviously work with a lot of the traditional players as well. And obviously, you've had a long career from your time at BNP to SIX to other organizations with Bosch Stuttgart and others. I mean, what is the challenges you're seeing in practice? What organizations trying to enter the space? Is it the human, the tech side, the misinformation? Well, what is it?
It's probably a combination of it, but I think the most dominant factor is the human decision. You cannot imagine sometimes how trivial a problem could be. A problem could be that a board excuse me, if a board director wants to enter the space, but his anti-financial crime unit says, no, we cannot monitor flows, we cannot control the safety of the deposit and the storage of the currency. What happens if somebody slots in a dirty coin in the ecosystem? Who takes the responsibility? So there is a lot of fear, and the fear exists because of unknown facts. Everything can be solved. This is the beauty. And the more people think about it, and the more people get proper and professional advice how to structure their business, all these questions can be answered. And then it simply becomes an additional revenue stream for the bank, or it becomes something that makes the investor and the client happy. I mean, there's a lot of competition in the space. So if one bank denies the access, the client moves on and goes to another bank and does it there. So it's eventually coming to a point where it is becoming a religious question. Do I want to be in this space, or do I not want to be in this space? And I think Sina and us, and Seba, we are playing in a similar, and sorry, I forgot Romain as well. We are playing in a similar field here because some banks decide I want to be in cryptos. So I get myself familiar with wallets, with key management, with security, with storage, with HSMs, with security devices, and so on. And others say, well, I want to grant my investors access into the product, but I don't want to handle with key and wallets and onboarding. Why don't we play it the classical way? Use securities, wrap it up in a product, list it on an exchange, and use the existing legacy systems and access the space. So I think both, for us as crypto broker, it's fine, because both sides, the product engineers need to hedge the business with us as much as the banks need to trade directly with us. So as long as we see the flow, happy days. But in terms of financial institutions, it is a different kind of animal if I deal directly into crypto or if I deal indirectly via product.
And I think I'm going to bring this, Sina, with the product element you mentioned, but I think the two elements you guys mentioned on financial crime, I always tell people, if you want to launder money, good old cash is still the best way. Yeah? I mean, I find it amazing if a bit of education can go such a long way on the crypto crime issue. I think the other thing also is the whole CSR element, or ESG element with the environmental impact, which is something we can talk about later in the panel. But I wanted to bring, you just brought up this a very good point on the wrapping it in traditional products, right? And Sina, I think this is like exactly what you guys obviously do at 21 Shares. And I'll be very curious to know not only that, but how, obviously there's been a lot of products like you that you'll be offering is, I wouldn't call access product, I'd say that's what enabling, but also very keen to know with the impact of the recent ETF approvals in the US, what do you think? And there's been, obviously we saw the volume in Canada, there's been more than $1 billion in AUM already in less than a month, or about a month. What do you think that's going to be having an impact on products like yours and also products offered in Switzerland?
That's a very good question, Henry. And we hear this question actually on a regular basis. So the answer to your first question is yes, institutional will also use ETFs. But what many people might not know is that it's not possible in Europe to have an ETF for cryptos, as by definition, an ETF cannot have just a single asset, it's not possible. So we believe that institutional in Europe prefer the institutional grade structure, which we can offer here in Switzerland. Since the Swiss ETP structure is not constrained by the usage diversification requirements, it's ideally suited to give investors safe access to more nascent and desired asset classes. For example, the Swiss ETP structure we use at 21 shares share many characteristics of a traditional ETF structure, such as 100% physically backed, segregated, meaning that counterparty risk is basically hedged out, have an approved EU passport, using several ETF market makers for intraday liquidity. So both ETFs and ETPs have a redemption creation feature, which typically ensures the price of the underlying doesn't stay significant away from the net asset value. And the main difference between ETF and ETP actually is that ETPs are debt securities instead of the funds otherwise. In terms of regulations, it's the same.
Interesting actually perspective. And you're right, I think that knowledge, the difference with the ETP and kind of the details of it are often not very much known. You're absolutely right, Sina. And actually, I'll bring it to you, Zaman, because obviously you're talking to a lot of these clients of the private bank, right? I mean, what are I think you think the avenues if clients are going to come in via the brokerage arm, they're going to go with asset management products, they're going to go by ETFs, ETPs, or even by the way, topic that hasn't come up yet, but or crypto funds, that we may see crypto hedge funds even. Where do you see the interest when people are asking you about access to the asset class?
Well, thanks for the question. I believe it's a good question because first, if you speak in terms of investment as an institution, it's important to follow the way you are the most comfortable with. But for us, we believe that if you want to benefit from the full potential of the digital assets and its features, it's important to own them. So you can exploit the future, like for example, the proof of stake, which will come for Ethereum and some other blockchain. And the most important, at any time you can decide to withdraw and to transmit to anyone or to any service you might be interested in. So as a bank, we offer the custody and the brokerage, and our asset manager are here to assist and find the best opportunities to achieve your financial goals. So we believe that the brokerage is key, but also ETP, ETF are also a good way to be introduced to digital assets. Yeah.
Sandra, would you agree with this? With the kind of the demand of instruments a lot of institutions want to use to have access to the asset class?
Actually, I think yes. Romain, you phrased it well. I mean, I would say that ETPs they're very easy for a simple directional exposure, often as a first step into digital assets. But what we, for instance, also see is that particularly institutional investors, they're looking for crypto portfolios that are tailor-made to their risk appetite and their investment needs. So on the back of that, also for Stablecoins is the only Swiss and probably only European bank to really able to offer crypto mandates, discretionary mandates on crypto. We can facilitate that. So we also see a lot of institutional investors that look to access not just really the directional exposure to crypto, but also derivative opportunities, for example. So selling options or engaging in a basis trade, and then basis trade being the difference between a spot trade and future price. So these strategies also, they offer a significant return potential. So it's really multifold.
Interesting. Yeah, I think a lot of these trades, and frankly, also I think on the fund side as well, we're generally offering absolute returns. Let's see when that's going to become more mainstream. Actually, PwC, we're going to release in a couple of weeks our global crypto hedge fund report. So looking forward to sharing the data on that side. And before I actually move on to Philip, guys, again, anybody has any questions to ask, feel free to send them. I'm going to tackle them one by one. You can put them on those on the YouTube live chat. Feel free to ask them, and we'll come back to you on a second on those questions. But I want to move it to Philip because obviously, Raptus mentioned the different approaches that institutionals have to accessing the asset class. On your perspective, Philip, from a infrastructure perspective, what is the one you think will be easiest for the asset manager listening to this, a broker listening to this, What's your view on it from an infrastructure perspective? Also, I think you're on mute. So after they turn on the unmute button, what should they do to get into crypto?
Yeah, so I think it has already been mentioned in the introduction. Something which is very key to us is convenience. So making things convenient for investors as well as for banks is one of our key strategic direction. And that's why we are integrating crypto in the core banking system exactly like any other asset, so that it makes things simple for investors to invest. They don't need to learn a new tool or find a new provider. They can rely on their existing trusted provider, their bank, and they can then expand the exposure to those assets for speculation or also for diversification, because they are not so correlated with other assets they may have in their portfolios. And so they have everything in one place. They have this through the same tooling, in the same reporting. So, you know, and for the banks, it's the same thing. They want to expand, some of them at least want to expand into their product mix, opening this up to crypto, and having the convenience to use the same tooling they are familiar with, leveraging the past investments is something for which we believe is key, and we have a very good response from our customers with this offering. Further on, I think that the banks are going to help in structuring this market, because they are coming with big volumes. So it's going to help the market to grow and to also add on some. I'm thinking of the secondary market, for example, which is already existing, but in particular for securities, for tokens, for security tokens, STOs, it has to develop dramatically. So I think banks coming with the volumes they will bring will help to structure this. They are also at the edge of that system, of that crypto ecosystem. So they are helping also the AML rules to be enforced, because the money they bring in is normally verified and checked from an AML perspective. I think this is a big feature. They can help also in making sure that this is seamless, that the transfers are also AML proofed, and that's why we are part of this Open VASP association, which has been created with a set of different VASPs to bring together the tooling. Banks and VASPs need to comply with the FATF rules. I think the banks will, on one side, benefit from the efficiency the DLT is bringing, and on the other side, they will bring the volumes and the years of experience of financial services into the DLT scene.
Yeah, which I think is quite relevant as well from that perspective, right? So
Henry, if I may add one thing,
sure,
because I think this is key. I mean, we have worked with Avaloq in the past as well. This is you can't underestimate the importance of the bridge builders. All these retail venues, you call them Bitstamp, Kraken, Bitpanda, Bitcoin.de, Bitcoin Swiss, all of them were so successful in their build-up because they were targeting retail outside the existing banking infrastructure landscape. None of the banks were able to offer it because they didn't have the systems to do so. And what Philippe just described is absolutely right. If you trade a Bitcoin on your private banking account with Deutsche Bank, you need to make sure, and the bank needs to make sure, that the transaction is monitored correctly, executed correctly, reported correctly, settled, paid, fiat, displayed in the portfolio overview. This is not trivial. And none of the bridge builders, such as Avaloq, had it in their drawers. Here it is, stick it in your PC as a USB drive, and you can use it 6 minutes later. This takes time. And this is going to be a really important factor of the success in the institutional space. Can the bridge makers and the banks build the platform fast enough in order not to lose too much business to the challenging offerers on the retail space?
Actually, on this point, go ahead, Sina.
I completely agree, Rupus, what you said. And there's another layer that we don't have to forget about is it's education. Because in 21 shares, we are the whole day speaking to clients, to the end, even to sometimes to the end customers. And what I figured a lot in the couple of last month, or even like since I'm at 21 shares, since the beginning, people don't know really what does already exist at the moment. So they don't know, should they go for a fund? Should they go for, do they have to wait for an ETF? What's the difference between ETP, ETF, and which bank does offer them a solution? Because they just simply ask their bankers, hey, I want to make an investment into, for example, cryptos, right? So what's the solution? And the bankers don't know. Many bankers even don't know, because it's actually a lack of education, because we're at early stage. I don't want to push someone, we are at early stage, but this will be something people need to educate themselves. They need to see who does offer what's the best solution for their clients, because all of us, we have a good solution, but what does the client need? Because so for some of them might be a crypto bank, for some of them a fund, for the other ones an ETP, for the ones they have to wait for ETF, etc. So education is absolutely key as well, you know.
So Sina, on this particular point, right, we have great questions, by the way, guys. If you keep the question, I'll add the rest of them. One is from Arno Pernthaler. Arno, great question, which is, Arno, to your point, Sina is saying, should we have kind of a CFA-like certification mechanism? Would that not drive not only knowledge, but also competition across the markets? I mean, do you think something like a CFA for crypto, actually crypto financial analyst, maybe, hey, here we go. We coined it here at the Crypto Valley event. Like, would you think that would be useful? I mean, based on your experience on the educational sessions you've done?
You ask myself now?
Yeah, of course, yeah. Based on what you said.
It does exist already, by the way. I mean, like, I'm involved in this kind of, it's called Certified Crypto Advisor. I don't know what. It's a 2.5 days course. It's existing in Zurich, I know that, and it's it's open for the whole world. So definitely this makes sense. Yes. And not only for the bank people, but also maybe for someone who's super interested in cryptos. Yes, I think education is key.
The other element as well, a part of education, is obviously the understanding the asset class. Maybe I'll ask this to Europe. We have a great question from Stefan Klauser. Great question, Stefan, which is the volatility. Do you think the volatility is a hurdle, for institutions to invest in crypto, especially when you look at it from the risk-adjusted perspective? What would be your answer to Stefan's question, Ruptus?
I don't think volatility is a hurdle. I think it's the other way around. Volatility is fertilizing the space, because if you have seen, if what we've seen in the past, let's say 3 to 4 months is unique. I mean, you must look back quite some time to find an asset class that has performed equally or better to what the crypto space has done in the past 3-4 months. But I don't think this is a harm. This is simply based on the fact that suddenly some institutional big investors opened the tap and invested. And if you invest a few $100 million or billion of dollars into the space, of course the price goes up, because most of these coins depend on demand and price. And so the more people buy, the higher the price gets. And what I would see as a volatility is, if it goes from 10,000 to 50, back to 10, back to 50, and back to 10 again, that would be a bit more worrying, I would say. But since what we've seen, I mean, we have seen quite a healthy bull run on a number of coins, and most of them can be explained, because some of them has to do with DeFi, some has to do with they have developed a new business model, some of them have developed new revenue streams. So yeah, it is not all Bitcoin. Yeah, Bitcoin is the headline, but it's not all Bitcoin. And and Bitcoin, by the way, is limited in availability. So yeah, how long do you want to wait? Do you want to wait until it's 100,000 or 200,000? Unfortunately, I do not know how far it can get. But the volatility, I say, is not an issue to prevent from investing.
Henry, can I add
I'll pass it to you, Sander, actually. And Sander and Jamel, one question. By the way, Ruptus, one day you should explain to me how Dogecoin is making to what it is, but that's a different story. But I'll move it to you, Sander, actually. I wonder if you can address two things as well. I think there's a great question of Dr. Scher on the Facebook stablecoin, and obviously with Libra, what does that mean for the broader ecosystem as well with Novi? But also a question that was also from Didier Borel, which is if stablecoins are gaining popularity, do you think more people will store their stable coins with their own wallet, especially in a low interest rate environment, or would there still people want to custody it on a bank? And what would the impact on the bank? I'm extrapolating a bit of for Didier's question, but I think, Sandra, I'll pass it to you, and then I'll ask the same question to Romain.
Is it possible? Can I add one more thing?
Of course.
Previous question as well, because
on the vol.
Institutional investors, right? They're not necessarily entering because of speculation, and they're entering because of diversification and conviction. I mean, you could see a couple of days ago, you had the New Zealand retirement fund, right, that decided to allocate 5% to Bitcoin. I mean, that's not because they're worried about volatility, that's because of conviction. So what was actually quoted, right, if you're happy to allocate to gold, you cannot deny Bitcoin, for example. And we actually crunched some numbers, and this we also frequently get these questions from family office, for example. So if you have a 4% allocation of a traditional portfolio to Bitcoin, that actually increases your Sharpe ratio by 50%. So there really, the volatility is a question. This, however, institutional players look at it differently.
Especially in an era of quantitative easing and monopoly money being printed. So I think that's definitely an argument to look at. Go ahead, Sandra, on the stablecoin element as well.
The stablecoin element. Well, that's a big topic. I think that it's going to be mixed, right? So you have the stablecoin element, custody directly on the private wallet. Hard to say. I would pass that question to the next.
So Romain, what do you think? I mean, you think let's say if with Novi, with Libra 2.0 coming up, right? I mean, do you think we'll have is there a risk as a bank, you think, of people just taking their money out and keeping it in their digital wallet and not keeping it in the bank? And what could be the impact on a financial institution?
Well, I believe it's an opportunity for the whole financial world, because stablecoin enable like a frictionless payment and enable a new kind of financial services. We're talking about like a tremendous topic as DeFi for sure. But in the future, we even don't know what will happen with the new services we are currently building. And I believe that people still need to have banks to store their assets because they want to be protected, but they want also to have like fast execution. So it's like plugging like on the optical fiber. We are now basically evolving the traditional financial world. And of course, some stable coins might succeed and some others might be in front of difficulties. For example, like we've seen that Libra has been has some struggled and some others too. But we have seen also some USDC, GUSD, USDT had some issues that they have fixed. So a lot of institutions start to work with some stablecoin because it's frictionless and also it's very useful for all broad payments.
Yeah, I think for DM, I think we should. I don't know what we're calling it even Libra with DM. I think or even Novi. So we should talk about that separately. But especially, I think with yesterday the news of the USDC with the Visa settlement. I think very interesting development from that side. Maybe I'll pass it to you, Philip. But again, one thing I want to add, I'd love to get your views. Is obviously Romain mentioned the stablecoin element with what DM could have. What about CBDCs as we come up with central bank digital currencies? What do you think the impact that could be with banks, especially banks that you're working with?
Well, firstly, stablecoins are definitely an important part of what we see for the future, because for investors to invest in a product, if this is denominated in cryptocurrencies, it's adding two risks together: the volatility risk of the currency we spoke about just a minute ago, plus the risk of that product. So I think this will reduce mass adoption. It makes the products more complicated. So denominating products in fiat currency, I think, is the way to go. And this means that you have to introduce a stable coin of some sort. Either it's a stable coin which is created by the bank itself, or it's a CDBC. Answering your question, I think CDBC will be interesting to offset the credit risk associated with the stablecoin, but we have to understand how far it goes. So far, I understand that CDBC is most often seen as a currency which would be held in the first tier round of banks and would not be used for consumers. So if this is the case, then the adoption would be maybe a bit less. It would not be so frictionless than the stable coin. So to be seen exactly what is the scope. But CBDC is not, I mean, it's important, but it has to be it has to be really fungible, so that it's really used. Otherwise, stable coins will continue.
I think that there's a big difference with wholesale CBDC and retail CBDC. Actually, that's a good distinction. I mean, if we're in Switzerland, obviously it's more a wholesale conversation, but places like China, where it's really full steam ahead now on retail CBDC, where they're years ahead of anybody else. So I think it'd be interesting to watch. Maybe I have another question for you, Sina. It's coming from Philip Taffley. Excellent question from Philip. Do you see Bitcoin as a risk on or risk off asset? I think, Sina, you'll be a good person to answer that.
Yeah, sure. Because it's a very good question. And at 21 Shares, we do a lot of webinars about this kind of topics, also for bankers or for people from portfolio management who would like to see, is it the risk on, risk off? And our analysis, and we work together with other experts, externals, because we don't want to say it's only 21 Shares saying this. They clearly show that in a portfolio, if you mix kind of 1 to, let's say, 5% inside of your portfolio, the Sharpe ratio increases. So you can make much better revenue for the risk taking. So we clearly saw in our analysis with the experts inside of these webinars that it's actually risk off. But then, of course, we always say at 21 Shares, be cautious. Just take the amount inside the proportion which is okay for the risk profile. Let's say like between 1% and 5%. We can't answer sometimes to give an advice how much they should take inside. But studies and portfolio management and all these theories we are showing are clearly proving that it's a risk off. So yes, we advise people. We don't advise, but we show people it is actually an added value in a portfolio. And don't forget, we also do a lot of research, because we have our own research team at 21 Shares. And those kind of questions, we prove you what is good, what makes sense, what doesn't, stable coins for what they're used, whatever. Like I come back to my other point, and I'm a little bit stubborn here, education is key. So go on these studies, go on these webinars. I don't say only about 21 Shares. I know that SEBA does a lot of good stuff, crypto finance and Bank Arab. We all cooperate together at one point, you know?
Yeah, no, absolutely. I think the education element, and it comes back to what Sandra was saying before about the diversification role, right? On the Sharpe ratio of your portfolio. I think that's what a lot of research is showing, and that could be quite useful on it. And there's an excellent question, by the way, here from Nicola Blazer on this is actually very interesting. It's something that comes up a lot in conversations with, like for a lot of the, maybe I'll start with you, Romain, on this one, but for a lot of institutional offerings, it's a lot of layer one, let's say, here he calls it legacy coins, but let's say early coins, Bitcoin, Ethereum, in your case, Romain, with Tezos, should banks or asset managers give more a focus on more fundamental research, or try to give that kind of exposure to coins? What do you guys think? Maybe I'll ask Romain, and then I'll pass it to you, Rob, on that question.
Yes, absolutely. That's a good question. I think it's really important to understand the purpose of the coin itself and to make the risk assessment before offering to clients. Because, there's a lot of marketing around like a lot of different coins, and people have some insight sometimes from family, from uneducated people, and they rely on that and on YouTube videos and so on. So we receive a lot of demand of clients who are looking into fancy coin, even Dogecoin and so on, which I believe it's a nice play coin, let's say, but not something like really like we can recommend as an investment. So basically, we have a team to do some research and do some assessment on what we can offer, and we offer also a lot of ERC20 coins, and we believe in the future of all these proof of stake coins, and also a lot of in the DeFi space and so on. Yeah.
Yeah, it makes a lot of sense on that perspective. Ruptus, in 30 seconds, what's your view on it?
Look, It is a question of quality, how many coins you can offer. We offer over 100 coins, some of them fully electronic, some of them on an agency best execution basis because they're illiquid. We provide research as well. We leave it to the investor to decide what he wants. At the end of the day, it's not only a question of execution, it's as well a question of can my storage division store the coin. It's not always the execution only. There's more to it than just execution.
Yeah,
And we
that's the
can
problem.
add 20 seconds.
Yeah, go ahead,
to that.
Sander. Quickly, yeah.
Okay, 20 seconds. So basically, we also have our own in-house research. It's extremely important. I mean, as Sina and others have said, right, education is key. We actually love the curiosity from clients coming to us, approaching us about certain coins. Obviously, we at SEVA, we hold and trade the coins, so we want to make sure we can custodize them as well. There's a whole new range of exciting coins that are coming up soon. But essentially, yeah, I mean, it's a really dynamic space, and again, we encourage people to keep asking and keep approaching us.
I can tell you, as somebody, as a professor, has been teaching this topic, I love when people are about talking education, which is excellent. Guys, as we wrap up the panel, my bell is with me from my hotel room in Dubai now. The Henry Bell is with us. So what I'm going to do now is just ask quick questions. I want all your microphones on. So Romain and Philip, your microphone on. And I ask a quick question, and I need the 1 or 2 word answers, and we're going to go on quickly on this. I'm going to start with Philip, and we're going to go down Sander. We're going to go like this on a clockwise. Hope you guys ready? Let's go. So if you could go back to university today, knowing what you know, what is the one course you would take that you wish you had taken? Philip, let's start with you.
Options.
Option on fine. Sander, what course would you take?
Trading.
Trading. My God, it's all trading. Here we go. Sina.
Social behavior.
Aha, here we go. Ruptus.
Programming.
Here we go. Romain.
Cryptography.
Here we go. It's all linked to crypto. Let me a second question, and I'm going to start with you, Romain, this time. If there is one resource, one book, influencer, website you recommend to anybody who wants to learn about crypto, what would it be, Romain?
Well, I don't know yet. Don't know.
Website news, I'll come back to you. Sander.
Basics of Bitcoin, Anthony Lewis.
Anthony Lewis, my good friend from Singapore. Anthony would be happy to hear this. Sina.
From Andreas Antonopoulos, The Internet of Money.
Great, quick, Andreas. Yep, Ruptus.
Patrick Heuser, Crypto Broker, Daily Market Commentary.
Oh my God, no, completely objective there from Ruptus. Philip, what would you say?
Ethereum Insight.
Oh, here we go. Okay, another question, more personal. If you were not in crypto, if you can be one other industry, not crypto, what would it be? Philip, I'm starting from you.
Pharma.
Interesting. Yeah. Sander.
Politics,
my God, here we go. Crypto politics coming soon together. Here you go. Rosina, what will you do if you're not in crypto?
I have no idea. I love what I'm doing, so I'm staying.
Crypto for life. Ruptus.
And 25 years derivatives, I want to go back there.
Trading that vol. Here we go. And Romain, what will you do?
I will not do anything else. I do the last 7 years, so I'm happy to have fun crypto.
Crypto, only industry, people love it so much. It's beautiful. Okay, one more. Price of Bitcoin by the end of the year. Over 100,000, less than 100,000. Romain, what do you think? Over 100K, less than 100K?
I believe we'll face the 100K soon.
Soon, by end of the year?
By the end of the year, I hope so.
I hope so, Sander.
Yes.
Yes, Sina.
Joker.
Ruptus, what do you say? Upper, we're over 100 or less than 100?
Over 100.
Oh my God, it's a bullish. Philip, are you as bullish as everybody else?
Yes.
Here we go. My God, this is a bull market panel. Last question to finish it up with our exciting panel that we've had on the flood of institutional investment. Last question, and I'm going to start with you, Philip. If you could have lunch with one person, dead or alive, who would that person be?
Vitalik.
Vitalik Buterin. There you go.
Yeah.
He'd be very happy to have that. Here we go. Sander, who would you have lunch with? One person, dead or alive? Churchill, my God, with his good cigars and his Armenian cognac and his whiskey. Sina.
Albert Einstein.
Oh, here we go. Beautiful. The MC Square. And Ruptus, would you have lunch, dead or alive?
Jan Frodeno.
Henry, who would you have lunch with?
Romain, and to finish it off with the crypto flood of institutional investment panel at the CVVC Top 50 event, who would you have lunch with, dead or alive?
Well, I hope to see Satoshi Nakamoto if it's one or multiple persons.
That would be my answer as well. I think, Sandra, I would say Satoshi as well. I would love to know he or she or they are. Guys, thank you very much for being us. We know you had a choice of what to listen. So thank you very much for being with us so we can share our passion on the topic of the institutional investments in crypto. That wraps it up for the CVVC Top 50 event, Crypto Valley and the flood of institutional investments. See you guys soon. Thank you.
Thank you.
Thank you.
Thank you.
Okay, I don't know if we're still live, guys, but that was great. Thank you very much.
Thanks, Henry.
Thanks, Henry.
Check that we're still
Thanks,
live.
Henry. And thank you, everybody. It was really cool to be in the crowd with you as the only woman. And Henry, I love the way how you do the thing. I think I will go on because I'm also moderator from time to time. I love the spirit, you know.
The Henry Bell.
Yeah.
Oh, I think we're still live, apparently. Sorry, guys.
I would call it the 21 shares bell.
Here we go. Apparently we're still live. So guys, thank you very much, everybody, for all this. I think we need to this is what happens when you're live. You don't know what discussions take place. So it was a great conversation, guys. It was thanks for having me, and it was a great honor to be with you all today. So thank you very much, and big hello from Dubai, and I look forward to seeing you all in Zug or in Switzerland or anywhere else in the world soon. Thank you, everybody.
Thank you, everybody.
Thank you.
Thank you. Cheers. Bye.
Bye.